The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
It is time to talk about money, and here we are. So, this is the time of year, the end of the year, the beginning of the year, when we begin to talk about what things look like for the following year. A lot of the traditional approach to this is what stocks to own, what mutual funds to own, what not to own, what to buy, what not to buy. I think those kind of questions should be addressed every day of the year. That's part of managing a portfolio. So it's not just at the beginning of a new year when you talk about what to own, what not to own, but it's a focus to look longer term at what makes sense for a portfolio. But I believe that as we begin a new year, maybe it's just traditional, maybe it's just something that happens, but it's a time to look forward, to talk about the predictions for what's going to happen during the year. And predictions are a lot like poker games. You know, if you're playing poker, and I don't know if you play poker, but if you play poker, the odds change as you deal out the cards. If there's a game called 5-card stud, for example. One card is dealt down to each player, and then one card is dealt up to each player. And then there's a betting, and then after everybody finishes betting and the betting is done for that round, another card is dealt up to every player, and betting begins again. And when that round of betting is done, another card is dealt up. Now, if you're sitting with an ace on the down card, and the first card that shows up is an ace, you feel really good because you look like you've got the very best hand, especially if no one else is showing an ace. You know, the person sitting to your left may be showing a deuce, a 2. So the next round comes around, and this time you notice that there are 2 other players who get aces that are up. And now you know that all 4 aces have been dealt. The best you can have is a pair of aces. And the person sitting to your left now shows 2 2s. He's got a pair of 2s. So you could lose. But if the next card around comes and that partner sitting on your left gets another 2, you know you have a losing hand. And so predictions are kind of like that. We begin the year and we focus on where we think things are going. But as the year progresses, as events continue to happen, the predictions need to change. And the fact is, that is part of managing a portfolio, is changing the probabilities, changing the focus, changing what your bets are as we go through the year. And so I don't share most of that with you during the year. I only share during the beginning of the year, but at the beginning of the year, I tell you how I did last year and how I think this year's going to roll. So I want to start looking at my predictions from 2017, or the beginning of 2017, comment on them, and comment on where I think things are going in 2018. Usually in the past I've done this as 2 distinct separate things, with one year, the past year, being talked about as how did I do, and then another segment on how do I look forward to the year. But because these 2 years are so close together, I'm going to combine the whole thing. I'm going to tell you what I thought about 2017 at the beginning of the year and what I think about 2018. You know, 2017 was a very good year for the stock market. I expected that. I said that in my show. I said I didn't expect things to revert to the mean. I said I didn't expect bull markets to come to an end because of old age. Secular bull markets can last a long time. Secular bull markets, the last secular bull market we were in lasted from 1982 to 2000, over 18 years. Secular bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and they die on euphemism. We're not in that phase yet. We're still in the optimism and with some skepticism thrown in as well. So we're in that process of moving forward. And while I thought 2017 was going to be possibly a good year, I also had apprehensions, and I'll talk more about those apprehensions as we're going on. It seems, however, that many people worry that the market is old. I think the best is yet to come. Maybe not just for 2018, but for the years beyond. But having said that, if you look at where we've come from the bottom in 2019 to the end of 2017, the average annual return during that period of time has been 19% per year. 19%. If you're looking at your portfolio and you're not seeing a significant move from the bottom, that kind of move, maybe you need to replace whoever's giving you advice. Or if you're taking your own advice, maybe you need to look somewhere else. But anyway, last year I was worried about a stimulus. I was worried that a stimulus has never been done during a time of expansion, and we have been in expansion. Stimuluses have only been done during a recession time. I don't believe that the tax cut that was passed at the end of last year is going to really be a stimulus to the economy. But I do think it's going to be a tremendous stimulus for the stock market. It's a big bonus for the corporations and the wealthy. They say that 83% of the tax cut will go to corporations and the wealthy. Normally, if you want a stimulus, you put the tax cut to the lower income levels, because those are the people who, if they get a few extra dollars in the paycheck, will go to a coffee house or they'll go to wherever, and the money gets spent. They'll buy a washing machine, they'll buy a car, they'll go out to a restaurant, they'll buy clothes. For those people who are wealthy, and some people will average $200,000 because of the tax cut, they're not going to spend that on extra restaurants. They already go to the restaurants they go to. They're going to put that into the stock market. They're going to put that into investments. It's not going to make its way into the economy. But corporations will see a significant increase in their profits. Now, last year I talked about the Trump bounce. The economy was doing well. The GDP was not yet to 3%. And we did. For the last part of last year, we hit 3%. We didn't hit 4% as was predicted by some of the other pundits for the market. I didn't expect 4%. But we didn't see a drop below 2% either. We saw 3% in the last 2 quarters. I think the Republican Party has made a huge gamble, and it doesn't matter whether it's Republicans or Democrats. In this case, it was the Republicans who did the tax cut with the idea that the GDP would get to 5%. My prediction is we'll be lucky to get to 4%. I don't think it's going to happen. But we will have, I believe, record profits. And when you're looking to 2018 to say a big jump in profits, that drives the stocks and the stock market. I'll talk more about that a little bit later. I'll come back to that idea. If you look at what I said last year, I said that we were going to have record cash levels in 2017. Yes, we did that. I said consumer debt levels would be lower than the long-term average. Yes, they were. I said that consumers would benefit from lower oil prices, and they did. Lower oil prices, lower commodity prices. That meant that they had more money to spend on other consumption products, which drives demand. That's the top line of the company. Hopefully, it drops to the bottom line. That's what I said last year, and it did in 2017. Unemployment was going to be below 5%. It did. It got to 4.1. That's better than I forecast, better than I expected. Income levels wages were going to rise. In fact, wages were up 5% in 2015. Family income was up 5% in 2015, 3% in 2016, and probably 3% in 2017. I expect wages are going to continue to improve. We're at 4.1% employment, and I expect that will continue to drive up wages as scarcity of labor makes it more important to pay a higher wage. Now, as a side note, there's a comment that 93 people 18 and over are unemployed. 93 million people are out of the workforce. That's true, but that includes all the retirees, that includes students, that includes the housewife or the house husband who stays home, has no intent to work. So it's not just 93 million people that are looking for work and can't find work. It's 93 million people, most of whom have chosen not to work. So don't be misled by that figure which is thrown out. So last year I also said that housing would not only recover, but would heat up. And that's been true, not only in Seattle, but the rest of the country. Don't go away, because we're coming to a break, and I've got a great guest with a great story, and I want to finish the predictions. So don't go away. We've got a lot more to cover.
For more information, click on adamsfinancialconcepts.com.
Did you know the 20-year annualized S&P return was 8.19%, while the 20-year annualized return for the average equity mutual fund investor was just 4.67%? That's a gap of 3.52%. It doesn't sound like much now, but it could mean the difference between retiring in comfort and running out of money. For some seniors, a gap that large could cost them hundreds of thousands of dollars and cut their retirement short. Don't run out of money. Call Mike Adams of Adams Financial Concepts today, 206-903-1019, and learn more about how you can, 1, create wealth for retirement, and 2, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
41 Bible.
We're back with more about money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So I'm talking about predictions, and later in the show I'm going to be talking about some of the concerns I have about the year, some of the wall of worry. Stock markets climb a wall of worry, so it's not abnormal to have worries as we go forward. I expect 2018 is going to be a very, very good year. Worldwide, I've talked at the beginning of last year that the worldwide economy would be improving. If you look at where we are today, almost all the countries are showing positive GDP growth, which supports my hypothesis that the super cycle is in effect. Not only are they showing positive GDP, there is not a single country in the world whose manufacturing is not increasing. Not a single country. Every single country, their manufacturing, whatever it might be, is increasing. Every single country, including the United States. So, I said that 2017 was going to be a good year for the S&P 500. I had a lot more concerns going into the year with the new administration. It did turn out to be a very good year. The results are in, and they're actually much better than even I expected. It's been all about earnings and the recovery in many industries, which brings me back, talking about earnings, to the tax cut. Because if you look at stock prices, stocks are based on a price to earnings ratio. So if you take the price of a share of stock and you divide it by the earnings per share, you get a price earnings ratio. And if you have a higher price earnings ratio, that means that people are willing to pay more for the same earnings. And the faster a company is growing, the more people are willing to pay for the earnings because the earnings are going up faster. So there's an average PE over a period of time. If you look at where the average PE is during normal times, it runs between 18 and 22. In 2014, the trailing price earnings ratio was 16.92. In 2015, it was 16.10. As we began 2016, the election year, it had increased to 21.56. It's because people were a little more optimistic. But if you look at 2017, it's 21.77, almost the same, very, very similar to what it was in 2016. So what that says is that it's the earnings that increased. If you listen to CNBC or read some of the literature, some of the magazines, some of the newspapers, they'll say it was the Trump effect, that he came into office, and the administration has seen a big bounce because of that. Regulations are going away. Bills are going to be passed. I'm telling you, it's about numbers. And I'm not saying anything against the Trump administration or for the Obama administration or vice versa. I'm saying it's all about earnings. The earnings increase were up over 20%. That's why the stock market is up over 20%. It shows up in the trailing earnings. The increasing is due to what the companies were doing, not what the administration was doing, not what the previous administration did, not what the current administration did. The earnings explain what's happening. I said last year that most of the time being in the stock market and strategy is like playing a game of chess rather than checkers. I owe that comment to Richard Bernstein. But, right now we're in a checkers game. Most of the time it has been chess, but not. And right now we're in a checkers game. The economy's in good shape. It was in good shape last year. It's in better shape this year. And the tax cut is going to add to earnings. The super cycle. I mentioned that before. I've talked about the super cycle. I've been talking about the super cycle for 7 years now. The super cycle was a study that was released by the Standard Chartered Bank out of the UK back in November of 2011. Had a lot of followers at that time. Had a lot of people who thought it was realistic and real. But it fell away with the credit problems and the overcapacity of 2015. People fell away and thought maybe the super cycle isn't real. Check my programs. I've never deviated from that. And I will deviate if I see that there are things which show that it's not happening. But if you look at it, and I mentioned before, every single country is seeing an increase in their manufacturing. Almost every country is seeing an increase in their GDP. And most of the emerging nations are showing a much higher GDP growth than we're seeing in the mature companies of Europe, of the United States. That is part of the super cycle. The super cycle is when the world GDP grows faster than average. And that's what we've been in. That's what we've been in since 2009. That's what they predicted back in 2011 was going to continue for at least a decade, maybe 2 decades. And we're seeing the impact of that. That means that exports, that businesses who are doing international business, they're growing from that, and that will continue. I believe that will continue through this year and through the next few years. The markets last year, I said, when investors get excited about asset classes, it's usually the top of the markets. When they get excited about banks and financials and oil, that indicates that we're coming to an end. And people are again excited as we begin 2018 about those companies. But it's not because they're so excited about their prospects. They're excited about the earnings that are going to come from the tax cut. Now, believe me, the tax cut's going to have a big difference, but it's a 1-year difference. Once we get beyond 2018 and once we get toward the end of 2018, as people begin to look forward to 2019, they're going to assess what earnings are and what revenues are for 2019. I mentioned that the tax cut was very positive for earnings going forward. It's not, in my opinion, going to do that much for the top line growth of companies. That's what comes from demand. What they hope for a tax cut, when you make a tax cut, traditionally it's been aimed at the lower income levels so that the people will go out and spend the money to buy dishwashers and buy equipment, buy whatever for the house, buy clothes, do restaurants, spend that money. That becomes a stimulus. That increases demand. The question is whether the tax bill that was passed will truly create demand or whether it's going to create just earnings. That's a question we'll address later and probably next year as we head to 2018. I've got a great guest. I want to introduce my guest. I do believe we're going to have a very good 2018. I think there's some concerns. Those I think I'll cover after my guest. My guest today is Ali Gambari, if I said that right, of Cherry Street Coffee House. Welcome to the program, Ali.
Thank you, Mike. Glad to be here.
So why don't we start with your background?
Okay, I'm originally from Iran. I came to U.S. in 1979, and that is my background, and I own Cherry Street Coffee House. That is pretty much my background.
So you started Cherry Street Coffee House. How did you get into the coffee house business?
When I came to U.S. in 1979, my goal was to go and learn how to make cartoon movies because we didn't have enough cartoon in Iran that it was made in Iran. But when I came here, revolution starts, and I end up have to look for a job because I couldn't get any money coming back from Iran. So I started working in a restaurant, and then I stayed in the restaurant business. I like the whole service business and being with people, and that led me to get connected with different friends in the business, and eventually a friend of mine used to own B&O Espresso in Capitol Hill. I started working with him, and then we became partner, and we opened a second location down in Pioneer Square, First and Cherry. And in 1997, I decided to split up because I want to establish my own brand, and that's where the Cherry Street Coffee House started, at First and Cherry in Pioneer Square.
So Cherry Street Coffee now has 12 locations.
Yes.
So talk about what you've done to build the clientele and the community at Cherry Street Coffee.
First and Cherry, as I told you, I born in the pretty loving and great family. So love and taking care of people always been part of my energy. And being in the business of coffee, I think, is one of the businesses that truly build community. Because when you go to the restaurant, you pretty much eat your food, you have to leave. In the coffee houses, people hang out and it's great conversation happen. And me being a people guy, I use that connection with people to continuously elevate the community. And as we do this and understand the dynamic that is happening between this relationship, I continuously realize new way of building community by sharing the word and making good morning and the smile important, and obviously teaching that to your team. And one thing leads to another. You cultivate the garden, the goodness just show itself.
So how does it begin?
As I told you, everything starts with good morning. For me, I make postcards, and one of the postcards I made was, if you wonder how many names God has, good morning is one of them. Because you can talk about all the good stuff. If your smile and your good morning doesn't resonate with people's heart, you need to go back on the drawing board, because that's where everything happens.
So we're coming to a commercial break. Keep that in mind. Good morning. Actually, we're good afternoon, but it's still a good day. And we're going to come right back. He's got a lot more to say about Cherry Street Coffee, and we'll get to concerns about the market too. Don't go away. We'll be right back.
More About Money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
Welcome back. We're talking about money. Actually, we're talking about Cherry Street Coffee House. I'm here with Ali Gambari. So, Ali, let's talk about what's going on in Cherry Street Coffee House, because you've got a special event coming.
Absolutely. Do you know in our Occidental Park location, we got a beautiful place called Cherry Street Public House. Is our new concept that my daughter Layla has started it. And being inside the Weyerhaeuser building and being in the Occidental Park, which as far as I consider is the Champs-Élysées of Seattle. And we got a great community. We got great people doing great stuff. And I feel that I want to energize the park by having a music program every Thursday night, and between the break time, I want to bring different people from the community to share good word that energize the community, starting with myself tonight, and I may do a couple of the weeks to just get everything started, but it's a perfect setting. And as I said, this can be done anywhere, but for here, the puzzle is just too beautiful. Between the park, between the people that they are making this happen, and Pioneer Square and our community, I think is all the good thing to come together and produce something that is going to be great for the community.
So describe more in detail what you expect to happen as far as the event tonight.
Okay, tonight we got a great musician. I cannot remember the name right now, but I'm going to be speaking about what is the meaning of life. I made a postcards, and the postcard said, what's the meaning of life? The meaning of life is to fuel the power of miracle with your love. Fuel the power of miracle with your love. And that never going to happen if your good morning, if your smile doesn't resonate with people's heart. And then the second part of it is don't just think outside the box, burn the box and invite everybody for a party. And talking about that box, which is our own individual challenges, my envy, my jealousy, my judgmental, to be all in these boxes, and you put that box in fire and you stand outside looking at this box in the sphere of love. Why you're in the sphere of love? Because you, good morning, bring miracle. And see myself to be focused that every time I have something that is negative and caught up in my own ego, see myself pushing all those negative thoughts inside this fire by staying focused and chanting the good word of love and patience and forgiveness. It's just a simple way for me to stay in the sphere of energy and love by continuously work on myself. And that's why I think 2018 is going to be great, because of I'm working on me.
It is going to be a very great year. So I want to go back and talk. You have 12 locations now. Mm-hmm. At a time when we're reading about another coffee chain being thrown out of their locations, closing down locations, what's the difference with Cherry Street and the other chains which are actually closing down?
As far as the other chain, they are trying to just duplicate same old stuff of 2+2. With the coffee chain like ours and some other great coffee chain that we have in the city, we are focused on building community. So everything is about number is fine. Everything is about relationship. But when you bring love to this formula, that miracle happen. For me, I'm proud to go and open a new location because I know my company will elevate the community in love. So focusing on the community, energizing the love, and that will never happen if your team doesn't feel that love. So everything starts from my team. So we designed a great place. We got a great people serving a great product. We build a strong community, and that leads to everything and things that no money can buy.
It's an awesome story. So along those lines, tell us about your locations so that some of the listeners, if they have a chance, can stop at one or two or all 12 if they want.
People can go to cherryst.com to find our location, but we have the stadium, we have 700 First Avenue, we got Belltown, we got Clay Store, we got 5th and Denny, we got Medical Dental Building, we got 3rd and Columbia, we got Pine and Melrose, we got 12th by Seattle University, and we're going to have a new one opening by Pier 54 by Ivers. I think I'm covering most of it. I'm not sure if I'm... Oh, and I got Fairview at South Lake Union, so they can find it on the website.
You have a lot of locations and a lot of community there.
Sexy locations.
Sexy location. So tell us again the website so that people can look up.
cherryst.com. CHERRYST.com.
Very good. So do check that out, and do go visit Cherry Street Coffee House. It's a great community. Thanks for being on, Allie.
Thanks, Mike. Thanks for inviting me.
Okay. So I want to shift, and I want to talk about the negative sides, the concerns I have about 2018, because at any time you'd have a positive outlook. Very often I say that the soup is eaten a lot cooler than it's cooked. Think about that. If you cook it on the stove, you take it out, you ladle it out, you put it in the bowl, it's going to be eaten a lot cooler than it is on the stove. And that's the way with the market. Right now, the market looks very, very good in 2018. But you have to look at the negatives as well. And you have to plan. You have to look at the probabilities. I want to come back to the example of the poker hand that I used at the beginning. I used 5-card stud, where you have everybody dealt one card face down, then everyone gets a card face up. You do a first round of betting, you get a second card face up, do another round of betting, you get a third card face up, do another round of betting, then the fourth card face up. And the idea is the probabilities change as you see other cards dealt. I use the example of being dealt a pair of aces, one that's down, one that's up, and your ace is the only one showing, and the person sitting next to you has a deuce, a 2. You feel pretty good about it until the next round, when another 2 is dealt to that person and you see 2 other aces dealt to 2 other people, so that you know that the best you have is a pair of aces. And then on the third round, when the person gets, or the fourth round, when the person gets another 2, you know you have a losing hand. It's a time in which predicting the stock market, predicting and picking out investments involves an ongoing focus, a day-by-day focus. Jack Album wrote a book, and in that book he said investing is a very difficult game. It requires a lot of patience, it requires a lot of determination, and a lot of insight. And that's part of the poker. I like the poker example because it shows probabilities change. And as I talk about things at the beginning of the year, they can change as we go forward through the year. That's the importance of following up. But at each time, you look at the probabilities, and when you have the pair of aces, you feel pretty good. And it's not very often that the person next to you is going to be dealt 3 2s, or 3 queens or 3 jacks. So So you hold on to what you have, and I believe that the market is going to be very, very good. I was concerned last year that what we were going to see is a reduction in regulations. And in doing so, that would be a positive over the short term, but it would probably be an overreach. And I used the example last year of the ninja loans. You know, the housing market took off at such a fiery pace in the early 2000s that loans were being made based on almost no data. They were called the ninja loans. They were making loans to people that had they weren't verifying income, job, or assets. They were the ninja, no income, no job, no assets. They still made the loan because house prices were increasing at 14% a year. And so even if somebody couldn't make the payments and defaulted, the price of the house would be up 30% before they foreclosed. And so you could sell the house for 30% and walk away from it. I was concerned. That was one of the regulations that went away early in the year. One of the things that was avoided is the full credit worthiness of the borrowers. I was worried at the beginning of last year that regulations would be coming down, and over the short term, it would be positive. Think about it. If you didn't have a requirement for state inspection of your house for the electrical, you could hire anybody, your brother, to come in and do the electrical work. And the risk on that is if your brother didn't know much about electrical, didn't know what type of wiring to put in, what size of wiring to put in, you could end up with a house burning down. There's a reason to have certain regulations. And yes, this year we've seen a lot of regulations that have been reduced. And I do believe there's been an overreach. Doing away with the individual mandate on Obamacare. Yes, there's problems with Obamacare, and there's things that needed to be fixed. Doing away with the individual mandate is the wrong thing to happen because it'll put 10 million people in the uninsured rolls, and it's going to make my insurance and your insurance values go up. I'll come back to this right after the commercial break because we are coming to a commercial break. I want to finish the example of the insurance because it was a key for a number of companies. So we are coming to a commercial break. Don't go away. And if you missed this program or missed part of this program, you can find it on YouTube or on our website. Don't go away. We'll be right back.
For more information, click on adamsfinancialconcepts.com.
How do you picture retirement? House on the beach, small farm in the country, traveling the world with your spouse. The one thing you don't picture is running out of money. Retirement dreams are shattered all too often by poor investment choices, sending many retirees back to work. If you think the job market is tough now, try entering it after you've retired. Don't run out of money. Start planning now. Call Mike Adams of Adams Financial Concepts today at 206-903-1019 and learn more about how you can create wealth for retirement and probably, most importantly, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019 or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So I was talking about regulations and doing away with regulations. You know, doing away with the healthcare mandate, something needs to be done about that. I'm sorry to say. When they were talking about the original Obamacare, and I did a series in 2013 with companies who had survived the Great Recession and what they did and what their concerns were. And while Congress, both the Democrats and the Republicans, were talking a lot about taxes, we're talking a lot about regulations, the biggest problem for most of the businesses that I interviewed actually for every single one of the businesses I interviewed, were healthcare costs. Healthcare costs were increasing at 13 to 14% or even more at that time. So Obamacare tried to address that by getting healthier young people into the program. I think that's a real concern that I have. I have a concern for the economy and for what things are going. It's my own health care, that's going to be covered. But to show for the long term and for demand, we need to deal with that problem. We won't deal with it during 2018, and it's not going to probably show for 2018. But it's something to keep in the back of the mind. I said that the impact wouldn't be felt for some years. I believe that's still true. I said that one of my concerns was the stimulus was going to be inflationary. I believe that's going to be true. We didn't see a stimulus. We didn't see the infrastructure bill. I don't believe the tax bill is really going to be a stimulus. But I do believe that with what's going on with businesses, we're starting to see inflation. If you look at where we are, inflation has been picking up. And it was a slow process. I talked about inflation any number several times. And that's the way I see the highest probability for this bull market ending is in a bout of inflation. I'll talk more about that. The question is, it takes a long time for that to happen. The issue I see is that, and concerning inflation, concerning where we're headed, is with the Federal Reserve. Jerome Powell will replace Janet Yellen. When we had Ben Bernanke, his research and expertise was on the Great Depression, so he had experience in knowing how to react to the Great Recession. Powell, on the other hand, is trained as a lawyer and is an expert on banking regulation. What happens if we pick up inflation or a Great Recession? Worse, the 1960s inflation was a slow creep up. People didn't recognize it that much until it was really going. When the recession of the 1970s hit, they allowed inflation to take off, and we ended up with stagflation. In my idea, we've got the wrong person as the head of the Federal Reserve. We don't know how he will react. If we look back at history, and I believe that history doesn't repeat, but that it rhymes, the head of the Federal Reserve from 1951 to 1970 was William McChesney Martin. He was appointed by Truman, served under Eisenhower, Kennedy, Johnson, and Nixon, trained in English and Latin at Yale. He didn't have a financial background when he went to work for A.G. Edwards. He got a seat on the New York Stock Exchange in 1931 at the time of the Great Depression. So his focus was regulation of the stock market. He didn't really see inflation picking up until the late 60s. And at that time, we were seeing inflation pick up and the beginning of a recession. At that time, Richard Nixon was president and worried about what was going on and wanted a head of the Federal Reserve who was more political, and he appointed Arthur Burns, who had been trained and got his degrees at Columbia. He taught at Rutgers from 1927 to 1944, so he lived through the Great Recession. His expertise was in business cycles, not in economics, but in business cycles. And he had a reputation that he was strongly influenced by politics. So William McChesney Martin had started to tighten the monetary, started to raise interest rates, squeeze down on the growth of money. Arthur Burns reversed that and pushed for an expansion of the business cycle because we were going into a recession. And having lived through the Great Depression, having worried about the Great Depression, Arthur Burns wanted to make sure we didn't get into a Great Depression, so he wanted an expansion. And what we got was not an expansion. What we got was stagflation. We've got a recession with inflation. My concern on the long term is that Powell is not an economist. He's a lawyer. He's an came out of investment banking. And twice before we've had lawyers as Fed chairman, and it wasn't good in either case. Not good at all. Maybe Powell will be different. Maybe all things will work well. Maybe Powell will be a very, very good chairman of the Federal Reserve. He hasn't even started his service yet, but my concern is there. My concern is there. I think it should be your concern. I think you should look forward and plan for it. The second risk I talked about last year was the risk of trade war with China. And we didn't have a trade war, but it's still possible and more probable for 2018. 23 new trade disputes were filed against 29 countries in 2017. That's the most since 2001. There were fights over Korean washing machines, Canadian lumber and paper, Spanish olives, Chinese aluminum foil, Vietnamese tool chest, Argentina biodiesel, and Chinese solar panels, among many of the others. Usually when trade disputes are launched, they're launched by companies, and they go through the Commerce Department, but we now have a Commerce Department Secretary, Wilbur Ross, who wants the Commerce Department to be involved and pay for some of these suits. Right now there's 79 investigations going on about unfair trade practices. And the White House has even gone so far as to label foreign trade, or will make the decision whether foreign-made steel and aluminum are a national security risk with very harsh penalties. History's shown that tariffs do not work. I've talked about the steel industry. I've talked about other times when it didn't work. It just doesn't work. Getting into a trade war is negative for other countries. It's negative for us. So those are two concerns. There's also the concern of the unknown. North Korea, I'm guardedly optimistic that's going to be resolved, but you never know. In 2010, I started talking about 2011. Didn't see any real issues on the problem. Who could have forecast a tsunami happening in Japan, which would cause the meltdown of the Fukushima nuclear plant? There could be something that is unknown completely. But if you look at the probabilities and look at where you are, it still looks like 2018 is going to be a very, very good year. It's the best place to be invested in. It is probably going to be as good or better than 2017 stock market. So keep the concerns in mind. Deal with the concerns if they actually occur. But otherwise, plan on a very bright and very wonderful stock market for 2018. That's my plan. Keep it in mind. And if you have questions about your portfolio, contact us at Adams Financial Concepts. We're happy to give you guidance. And I will be back next week to talk about money.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again for more About Money with Mike Adams here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review.